Hello everyone, this is Jay and good morning on this awesome Sunday, and I'm definitely feeling much better, and thank you to everyone for the well wishes. I really appreciate it. All right, but now let's go into my weekly updates and buys of my dividend portfolio. But before we go into the updates tab, please don't forget to hit that like button and subscribe so you can join me in this journey. The channel continues to grow, which is awesome. All right, so let's go into my updates tab. And here it is, all of my purchases. So in column A is the ticker symbol of each company that I purchased. Column B, all of my purchases are highlighted in green. Column C, the date, which everything was purchased on November 10, which is Friday. And then column D, the share price that it was at when I made my purchase. So of course, my very first purchase was SCHD. I put $35 towards it. The share price was at $68.84. I'm definitely trying to grow that position right now on this dip under $70. I'm trying to stay bullish. I'm gonna see if I have some like an extra of $10-15 this week, so I can maybe buy a little bit more of this one since it's on a dip right now. And then my next one is VYM, which is another one. Hopefully I have a few extra dollars this week on my budget. I'm gonna be extra frugal this week, and I'm gonna try not to spend too much money on lunches or anything like that. So I'm gonna try to purchase some more of this one, which is I just made a purchase of $15. Share price was at $101.86. Then I made my weekly purchase of $10 for FXAIX S&P 500 index fund. The share price was at $153.45. I do every week these three right here, these two ETFs and this index fund. Every week I purchase them, no matter what the price is at. Then I put $5 into each one of these right here below, which the first one was PFE Pfizer. Share price was at $29.38. I'm really growing that position that I started in June. Then my next one was Vici, $5. Share price was at $28.22. That's a nice real estate company also. I really like it, and I really like their growth. Then J&J, Johnson & Johnson. I made a $5 purchase. The share price was at $146.79. I really encourage you to do your research in this company, because if you want to start a position in this company, I believe that this time is right now, especially at these prices right here. Just always do your research. I'm not a financial advisor, guys, so don't take this as financial advice, but do your research. Right now, it is at a good valuation, in my opinion, and such a great company. Then my next one is KVUE, which is a spin-off from J&J. I put another $5. The share price was at $19.16. Then I put another $5 into Stag. Share price was at $34.30. And I encourage you to stay until the end of this video, because I want your opinion on a move that I want to make that includes Stag. And I really would like to know your opinion. But let's continue into my purchases. So $5 of O Realty Income is still on a dip right now. Share price was $50.12 when I purchased it. And it is still on a dip. And I really like this company. One of my favorite ones. Do your research. Really nice real estate company. And then I made another $5 purchase of KO Coca-Cola. The share price is at $56.34 when I made the purchase. And then my last purchase of the day, I put $5 towards MPW. This one has me a little bit nervous because it's going on a dip like really hard. And it's bringing my portfolio down, but I am planning on holding long term. I haven't changed my opinion in it. I think they will weather the storm. I think that they will come out of this one. So I purchased one whole share, $4.13, and then the last 86 cents pretty much were purchased at $4.14. So the total of the purchases was $99.79. I was only able to put $100 this week. So I distribute that through all of these holdings right here. All right, now let's go into my dividend portfolios tab. Right here, and of course this is my spreadsheet where I keep track of all of my holdings. I grabbed this information from my Fidelity brokerage account, and I inputted in here a couple of columns. So in column A, I have all of the companies that I hold, all of the ticker symbols, and in column C, all of the total shares right here. And let's start with SCHD, which I have 30 shares. Price closed at $69.44. My cost per share, $72.49. I am on the negative right now by $91. I have a lot of money invested. As you guys can see here, 2,178. This is with dividends reinvested, which is awesome. I'm not regretting that, but I am really happy that I am at 30 shares right now. I'm really aiming at hitting 50 shares before the price goes back up. So I'm really trying to tackle this one really hard. Then I have 22 shares of Realty Income. And my cost per share is $58.80. I'm really bringing it down, my cost per share, which is awesome. I'm going to continue being bullish in this one, even though it's such a large position in my portfolio for a single company right here. But I'm trying to hit 25 shares before the price goes back up. Bank of America have 28.5 shares. My share price, $28.49. Then my next favorite one is Main Street Capital Maine. This one I have 15.5 shares. The cost per share is at $38.10. I am in the positive in this one by $34. But I really like this one. I encourage you to do your research in this company. They pay monthly, and then they have those special dividends almost every quarter or every other quarter, which has been helping me growing this position right here. My next one is Johnson & Johnson, J&J. Of course, my cost per share is $161.38. And right now, look at this, $147. I'm definitely trying to continue to build this position right now on this dip. I am in the negative by $59. All right, Procter & Gamble, 3 shares. I did not buy any. I am in the positive in this one by $50. My cost per share is $136, so it's way above my cost. My next one is VYM, which is one that I'm trying to grow. Put it right here next to SCHD in the second spot, but I'm still very small in it. I have almost 4.5 shares. Cost per share is $104. I am in the negative only by $6. So I'm okay. I'm continuing to build that one. Then my next one, Coca-Cola. We're a fan in my household of this one. Seven shares. And my cost per share is $57.53. It is going back up, especially after beating earnings recently. So it is back to the $56.72, but it's still on the range that I want to make purchases on right now before it goes back into the 60s. I'm trying to continue to build this position. Then, of course, my S&P 500 Fidelity Index Fund. My cost, it is $148. Right now, I'm in the positive by $11. It is usually a lot of people have this one as a core holding, any S&P 500 Index Fund or ETF. A lot of people have it as a big core holding, but most of my money is in the 401k. In my 401k, is in an S&P 500 index fund, so I'm okay with this one being at the size that it's at, but I am planning on holding long term. My next one is Pfizer. I was able to get to 10 shares. My cost per share right now, it is at $35.18. I started this position in June, so I'm really trying to continue to tackle this one on the recent dip. So right now the price is at $29.48. So definitely a good company I always wanted to have. Apple is shoot back up. It is at $186 right now in price. My cost per share is $132. I don't know if Apple is gonna go down in price anytime soon. But right now I am in the positive by $80. Then my next one, it is my the one store that I actually invest in, which is Starbucks, and also they have their products everywhere. They sell them in Aldi, I think Walgreens and other stores. So this is definitely a company I want to hold long term. I think that they do so great. I don't go make purchases at Starbucks. I do buy their shares though. So that's my way. I like to make my own coffee at home. I'm okay. I drink my coffee black, so I'm okay with that. It's much cheaper. But I really appreciate everyone that goes to Starbucks. And my wife and my daughter actually goes there. So So that's why I purchased also this stock. That's one of the reasons why my cost per share is $88.59 right now. I am in the positive by $40, but I was making purchases of this company when it was in the low 90s. So my next one is MPW. I'm at 58 shares. I'm gonna continue purchase a share like every week, pretty much, or every other week, so I can continue growing this company. Hopefully, it will turn around in the future because I am in the negative by $300. This is a big one. It's really bringing my portfolio down, but I'm continuing to bring my cost per share down, which right now it is at $9.70. I'm going to continue working on that one. Then my next one is one of my favorite real estate companies, Vici. 7 shares, and my cost per share is $30.15. I'm going to continue to buy right now at these prices. It closed at $28.46, which is awesome. Then CanView right here, KVUE. I have 8.9 shares. The share price is right now at $19.15, and my cost is $23.66. I started a position on IPO when it first started, so that's why my cost is so high right now. So, but I'm gonna continue buying $5, every week or almost every week, so I can continue building that position. I believe in this company long term. And then my last position, which is my smallest position, is TAG. I have 4.6 shares. My cost per share right now is $34.81. And I am in the negative only by $1. So it's not bad. So my portfolio, I do have $144.96 in cash right here, as you guys can see right here. So right now I am in the negative by $738. So my portfolio market value is $8,559, but I have not lost those $700 yet. Why? Because I have not sold any of these companies. I am going to continue to hold them, even though they are in the negative. I really don't mind. Whenever I see this red, I see opportunities to buy. And I am going to continue building my positions there. All right, so let's go into my yields and dividends and estimated dividend tabs right here, or columns. And this is what I'm working towards, which is the estimated yearly dividend for each one. And as you guys can see here, SCHD is still my highest, $78.67 of estimated yearly dividend in the next 12 months. If they paid every quarter 0.6545 cents. This is their last dividend for each company in column M. Right here, this is how much each company pay per share in their last payment. Some of them are monthly, of course, and some of them are paid quarterly. This is the estimated yield on cost right here in column N. For each one. This is based on my value, on the value that I have on this company. As you guys know, right now it's like over 6% yield on cost. That's why I'm trying to build that position right there. I want to continue to bring my yield on cost up, and of course my yearly dividends also. Right now, my estimated next dividend, which is the column P for all realty income, is $5.66. So pretty much every month I should be getting, if I don't reinvest or if I don't buy any more shares, I will be getting every month from this company around $5.66. And then in estimated yearly dividend, which is column Q, $67.97 is an estimated, of course. They can raise it, they can cut it. Hopefully they don't cut it, but they can raise it and then it will continue to go up. And these are all of my estimated yearly. This is how much I will get paid from each company that I hold an ETF in the next 12 months if they don't cut their dividends or if they don't raise it. If they raise it, it's even better. I'm really hoping that they all continue to raise their dividends. And this is my estimated yearly dividend from this portfolio, which I should earn around $367 total in dividends from this portfolio in the next 12 months if everything stays the same. And then right here it is a chart that I made, which is where do I get my yearly dividends from which sectors do I get them the most. So as you guys can see here, the real estate sector is my largest right now at $122, around $122 total from all my real estate holdings right here, my REITs. I don't really own any real estate on the side, only my house. I don't rent or anything like that. So, but and then the only thing is that all of these dividends right here are not qualified, so they get taxed as ordinary income right here. So I really want to continue building my other positions so I could get more qualified dividends. So in the ETFs, I get around $97, which is my second largest. And then financials, around $71 in a year. And then healthcare and then consumer staples, as you guys can see right here. All right, so one of the questions that I wanted your opinion on, if you guys don't mind, in the comment section, it involves Stag right here. As you guys can see here, Stag, they paid around 12 cents a share per month, pretty much. Their yield is around 4%. And then I get like an estimated yearly dividend of $6.87. So what I was thinking on this company, their dividend growth is very, very small. I started a position in this company. It's not that I'm saying that this company is bad. I don't think it is a bad company, but I think I could put this $161.66 to work better, meaning I could get more yield from this $161 and more growth. So the plan that I have that I might be doing another video on is selling this position. I am only down by $1.10, but with dividends reinvested, which I have been, I am really in the positive by like $1 because I have received like over $2 or $3, around $3 of dividends. But what I'm thinking on doing with this $161 is to make a purchase of 2 shares of Realty Income, which is at a much higher yield on cost, which will be around 6%, and then put the remaining of it on either Main or another company. Main right now, my yield on cost is 7%. Right now it's at $40. So I'll probably get like, it should still be around 7% yield on cost on any purchase that I make. So what I was thinking is purchase 2 shares of all Realty Income at 6% dividend, and then put the remaining of the money towards Main Street Capital. Let me know, guys, your opinion. If you guys were in my shoes, would you guys make that move? I'm really, really considering making it, just because it is their dividend growth is like less than 1%. All Realty Income, I think, is like 4%, 5%. We can definitely take a look. Let's go. Actually, I have pulled up Stag right here. Now let's go into their dividend growth. This is not a bad company. I do believe it is a good company, especially to hold long term. But their growth is just so small. I really look at the dividend growth history right here. And then, right here, the 5-year growth CAGR, only 0.7%. Which is really, it's really not that good. It's not keeping up with inflation. I should have done maybe a deeper research, but I did invest in this company thinking long term. The only thing is that right now I think those $166 can grow better into those other 2 positions that I explained to you on, especially when you look at the Realty Income website. They are very diversified. Stag is only in the industrial sector. Realty Income is everywhere pretty much. They have over 13,200 assets or properties, and on 85 separate industries, which is very, very good. Portfolio occupancy is 98.8%. They made a recent acquisition also of another real estate company, which I did a video not long ago. But as you guys can see here, they also own industrial, which I won't be missing if I just put that money towards Realty Income. And then realty income, if we go into right here, let's go back into Seeking Alpha, which I'm not affiliated with. But if we look at the dividend stats on realty income, I will get a 6% dividend yield, and then the 5-year growth CAGR is 3.69%. So it's over 3% more than, or around 3% more than Stag right now. I do believe in realty income. I think they will turn things around, of course. I think their share price is going to go back up. This is not financial advice, guys. Entertainment purposes only, but I really want your opinion. What do you think about that move? If I make that move this week, I really am considering it, especially just, it will be more income into my portfolio and more growth, pretty much. Let's go into Maine. Let's see how their dividend growth is also. So I really do think this is a no-brainer move. I think a lot of you guys are gonna agree with this move. But the 5-year growth CAGR for Maine, 3.58%, which is awesome. As you guys can see here in 2020, due to the pandemic, they had their dividend cut pretty much. They cut it down a little bit, but they have been growing it, especially with those special dividends. So this company is definitely doing great, in my opinion. Also, their numbers are looking really, really good. So what do you guys think about that move if I make it? I really would like to know your opinion. Also, I wanted to go into my updates tab again. There was one comment that really caught my attention. There's a lot of your comments that I really, really want to talk about them. I really like to interact with you guys. It's one of my favorite things of making these videos. And this one comes from Lee Reed, 1234, which say, I started dividend investing in March this year on my $1,350 tiny portfolio. My dividends for October equal around $8. This is around my 4th best month. And in May, I don't have a single payment. So Lee Reed, definitely that is awesome that you started your investing career. Trust me, the $1,350 in your portfolio, they're just gonna continue growing if you stay consistent. And yes, it is $8 right now, but trust me, it will be growing if you stay consistent. Of course, this is not financial advice, guys, but you can look at my videos, how I've been growing my portfolio. I only put around $100. That's all I have been doing. And my portfolio is over $8,000 in market value, and it's making me over $300 in the next 12 months if everything goes well. If you guys see here in my yearly tab, Lee, you see right here, I was making $1.07 in September of 2022, and look at September 2023, $45. So can you imagine in September of 2024? I can't imagine. I really would like to see that next chart. So I'll just have to wait until next year, but I'll gladly will. Just stay consistent. Don't listen to negativity. You can follow my channel. Stay subscribed to my channel. I'm always positive. To me, any portfolio size is a good size portfolio as long as you start. That's always my thing. I don't compare my portfolio to others. And I don't put anybody down. I like to stay positive. I like to encourage everyone to continue investing to better their life in the future. And to have a great future. Also, continue to build their wealth, which is awesome. Right here, look at this, Lee. In November of 2022, I made $8. $8 I made in November 2022. And then I'm going to see now in this November to see how much am I going to make. But I just stay consistent. This is the chart that keeps me consistent. Definitely, it keeps me feeling really, really good. Make yourself a spreadsheet so you can track your dividends and you can track your income, and then it will also keep you motivated. I'm telling you, I have no regrets on making this spreadsheet right here. Another thing that people have been asking me is about my spreadsheet. I really appreciate all the compliments, and I really like that everybody likes my spreadsheet, or a lot of people like my spreadsheet. I'm gonna try to see yesterday I wasn't able to figure out how to share my spreadsheet because I was really looking into all of my stocks right here, and that's when I saw this tag, and I thought about making the move, just because I started looking at the numbers on each one of my positions. And since Stag is such a small size, I want to continue growing all of these larger positions, and try to make my money work better for me in the future. Especially, one of my goals is to have some free time with my kids in the future, and not have to work two jobs for the rest of my life. So definitely, it is something that I'm working towards. I want to spend some time with my family, doing family things. All right, everyone. So I hope you enjoyed the video. Please let me know your opinions in the comment section. I really appreciate the interaction with you guys. And also, please don't forget to hit that like button. I really appreciate how the channel is growing. Please subscribe also so you can join me. I like for the channel to continue to grow. I'm really getting very motivated to continue making videos. And I really enjoy making the videos and interacting with all of you guys and sharing my my portfolio also. All right, everyone. So I hope you all have a great Sunday and enjoy the week. So I'll see you guys on the next one. Bye. Disclaimer: I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.